Here is we live, is we live. It's your man, Don Bucks. Welcome to another episode of Cheef and Chart, another rap and dope production. The home of money conversation. We talk all things black wealth. Cheef and Chart, though. We're talking about what the charts say in particular in regards to options trading. Hit the like, hit the subscribe button. Make sure y'all hit the notification bell because your boy don't go live the same time every day. You dig? But I want to start off by saying simplify, simplify, simplify. You got to be simplifying this process. Now, the more and more I tap in with folks and I get to listening to them, you know, the so-called experts in the options field, they be talking a whole lot of confusing shit. And I'm like, fam, this is why people be losing money. I just be sitting back listening. I'm listening. Yeah, and the implied volatility and the congruence of the upper parabolic channeled move, bro. The ARV and the, bro. You have to go one step at a time. In a conversation, we talking to beginners. I've learned that we got to remember that people aren't where we are in regards to the jargon, in regards to the different nuances, things that we're looking at. That's why I created Cheef and Chart, man. Roll one, and so we can really get this. But my thing is, I want to simplify this shit. That's why I created this shit. We want to simplify. We want to decode the matrix. All right, because options is not hard. It's just people be all over the place. All 100% of the strategies work. Y'all hear that? 100% of the strategies work. But none of them work 100% of the time. 100% of the strategies work. Run it back. But none of them work 100% of the time. So, what does that mean? Y'all, pick one. Pick one that works. And stay with it. That's it. Because none of them work 100% of the time. None of them. Pick one that you're comfortable with, right? And in my course, I give you one that I'm comfortable with, right? So that's what happened. People take this course, take that course, take that course, when in actuality, you want to dig into that one strategy till you understand it, right? Yeah, you want to get different nuance. You want to read books, yeah. But all of the strategies work. Ask any expert. All of them work. None of them work 100% of the time. Can't say it enough. So that means pick one and use it over and over and over. The disconnect be when people over leverage. What does that mean? They're using too much money in a trade. Like they can't stand for this trade to go against them based off the amount of money they use for the trade. You shouldn't have been in that trade if that's what you're doing. So that's the first thing I teach. And if you haven't took my course, the link is in the description. But we need to know our emotional threshold from the rip, from the gate. That's the first thing you need to be deciding, because once you know that, then we can move on to what kind of contracts you need to be getting. But if you don't know what kind of contracts, you don't know what kind of risk tolerance you have, you're just going to be picking any old kind of contract. And then on top of that, you think you're going to be right, because people have been giving off the illusion that you have to be right every trade. And no one, it's impossible to be right 100% of the time. It's impossible, but it doesn't matter. You don't have to be. So just an update on the small account challenge. I told y'all I was going to show y'all how to turn up $100. So I opened up a new account on Webull, and I'm liking Webull right now, y'all. Shout out to Webull. Actually need to put a link in the description, so it's probably going to be one soon in there. If y'all don't have a brokerage account, if y'all want to try out a new one, it's pretty dope. Probably going to get like 13 shit. Look, and you get a bonus for depositing money. So I deposited $100, but they gave me $120 worth of stock. Apple stock, IBM, no Ricky Dink shit either. So I'll probably start posting a link in my description, so you can go ahead and get your, so we both can get a bonus or something. I get the referral bonus, and you get the bonus for signing up. So Webull is fire, but like I said, quick update on that small account challenge. I think I'm up about 10%. After this trade, I'll be up maybe 20%. And it's been only what? I don't know how long it's been, but it's only been probably a month. Right? So that's 20% in a month. So I turned 100 into 120. Well, it's not complete yet. The month ain't over yet, but that's the power of options trading. You're not going to get 20% in no bank account. Right? Trying to save your way to that business, or trying to save your way to that 3 to 6 month expense fund that you're trying to put up, you ain't going to be able to do it with a regular bank account. This is the power of options trading. You're not going to be able to do it with regular investing either, unless you're using big money. Options trading allows you to use small money to turn it into big money. So 20% in a month. So that's $100 turned into 120, right? Hypothetically speaking, because the month is not over. So 100 into 120. So just imagine if that was 1,000. So 1,000 into 1,200 in a month. You're not getting that in the bank account, right? 10,000 would be what? What's 20% of 10,000? 2,000. So 10,000 into 12,000 in a month, because it takes the same energy. It's the same energy to make $20 on 100 and 2,000 on 10,000. It's the same energy. They're making the same type of trades. I'm starting with a small amount of money, right? But this is how you scale up. This is how I did it in the beginning. When I first learned options, I used the $500 of the stimulus check, and I was using small money while I was making small trades, shall I say. I didn't use the whole 500, but as I got good, the 500 turned into 600. Then I started, got bigger on the trade, started making more money. Then I was able to start using more money in my trades as my account got bigger. People try to do that out the gate, and that's where they blow their account, and now all of a sudden options don't work. No, you're over leveraging. So you need to figure out, we all need to figure out what your emotional threshold is, emotional threshold amount that you're willing to lose and still be able to trade effectively. Because if you're worried about the amount of money that's in a trade, you're going to be more focused on the money than the strategy that you're using. You'll be like, because it's down 20% or whatever dollar amount. If you're worried about the dollar amount, you'll be more likely to sell when it's about to bounce and do what you thought it was going to do in the first place, right? But if you're not paying attention to the money, you'll be more likely to just be looking for if it's bouncing off of levels, or if it has a possibility of bouncing off of a level. And I'm going to get into that in the charts. But I always like to start with a story. Let me get off my soapbox. Let's get into it. So the SPY, y'all, y'all know we on that uptrend. If y'all been following along, as a matter of fact, if you haven't already, hit that notification bell, hit the subscribe button, and send this out to some folks that need to understand the charts. So y'all know on the SPY, we're out of that downtrend, right? You'll see these levels I drew in here, right? Got to draw your levels. So make sure this is level. And yeah, what I'm going to do is this. Boom. That part. All right, so those are the daily levels of the SPY. It's highlighted in white. So the blue line, that was the downtrend that just got broken. As you can see, it swung up and it broke past the last swing high of the downtrend. Okay, so that is the qualifier that the downtrend was broken. When price starts trading up and it breaks past the last swing high. Another qualifier that we're in an uptrend is that the upswings are twice the size of the pullbacks. So as you can see here, we have way more green, less red. Green, less red. More green than red, right? And then on a downtrend, it's just the opposite. So it's more red than green. More red than green on the downtrend. So we're clearly on the uptrend. We broke past the last swing high. I like it. I like it a lot. I like it. So the next level up, y'all, is all the way up here. So we have a lot of room to run, y'all. We're dancing around in a level right now. I think it will consolidate some of this strength. Maybe bounce around right here for a couple days until next week when it continues up. That's my consensus. We have MACD high momentum. The momentum is stupid right now. See all this? And then we have a new high in it. So any weakness, you want to buy that weakness. So this is what the SPY is doing. You want to know all the time what the SPY is doing. They say keep your eye on the SPY, yo. Because rising tides lifts all ships. What does that mean? That means the SPY is the overall market. These are the major companies of the stock market. So whatever they're doing, a lot of times out of 10, the rest of the market is doing the same thing. So you want to see what the SPY is doing, then look at your play. So we know that the SPY is on an uptrend. So let's look at our company to be on an uptrend as well. Right? My stock is MO. And as you can see, it looks similar to the SPY with the big downtrend. And now we're trending up. New high on the MACD with weakness. What do we say when we see a momentum divergence? We buy that weakness but why we want to wait for it to finish falling, right, before we grab. So we're going to go down to our trading time frame, which is the 2 hour for me. And we're seeing that momentum divergence on the daily. So we know that there's bullishness in here, right? So what happened yesterday? So yesterday was the 16th. So I believe I took a call right here after taking profit because I did a call here, took profit here, and I thought it was done falling here. So I took calls here for the continued uptrend, and it dropped. So what happened is today it opened down, right? But I still see momentum in the MACD. There's not a new high, right? It's not a new high, but I'm still bullish. So what did I do? Being that I see on the daily that there is a new high on the daily MACD, because the longer term trend always takes precedent over the shorter term trend. So these are the recipes, the ingredients that you're going to be able to start mentally putting together when you're looking at stuff. So the daily trend takes precedent over my 2 hour time frame. So I see a new high here in the daily MACD, but weakness in the daily bar. That means strength. That equals strength. So that regardless of what my 2 hour says, the daily is what holds the most weight. Okay. So keep that in mind. The older time frame trend always takes precedent. So if you're on the daily and there's a downtrend, but if you go down to your trading time frame and there's an uptrend, that uptrend is going to be short-lived because it has to conform to the older time, the longer time frame trend that holds precedent. So my daily has new high in the MACD with weakness, so I'm bullish. So regardless of what my 2 hours say, I'm bullish. I'm just trying to wait for it to fall to where I want it, or to continue falling and stop. So it dropped here, pin bar. It wasn't exactly at the level, so I should have waited a little bit longer, but the pin bars be exciting me. So I take my edges every time I see it. So I took profit, it dropped. I entered a call here. And this morning it opened down. But like I said, there's a new high in the MACD in the daily. So I'm buying weakness. So I bought another contract here, right? And then it drops some more. So I'm like, sheesh. This is where you gotta, trust your edge, because why did I buy? I'm like, it fell again, but it stopped right here at this level. This is a level here, as you can see. I just don't have it drawn in here. Let's draw it in here. This is a level. It's important that you draw your levels so you can know what's going on. So stop. All right, so boom. I took a call here. This is probably not even a level. But I took a call here. I should have waited. Right. Then it opened down today. Boom. Right here. So it dropped. I took another one here. I bought another one. So as I'm buying these contracts, they're cheaper. So I'm averaging in. The contracts I bought yesterday are more expensive than the ones I bought today, because as the price goes down, so does the price of the cost of the options contract. So if I bought one here at 20, this one probably was like $16, and this one here was probably like $14. So if you add the three and then divide it by three, the price that I bought them overall is cheaper. So my break even is closer because I bought them for cheaper now when you average them all together. So now that I know that it was bouncing because here's a level, I'm happy. But I have shout out to time on your contract. Shout out to time on your contract. So what I seen on the daily, the strength in the MACD, but that momentum divergence in the daily is confirming itself right here by bouncing. And here's your green bar. Right? You can take it down to your relatable and you can see it right here. This is where it turned green. This is that pin bar that we were just looking at. That is this. What time is it? 15:30. Let's look at it. See, told you. That's this. But you can't see these green bars in that 2 hour. That's why you got to go to your relatable, which is the half an hour. How do you find your relatable? Whatever your trading time frame is, because I know I felt somebody just ask it. Whatever your trading time frame is, you want to divide that number by 3 to 5. So if you're, whatever one makes sense, right? So if your trading time frame is 4 hours, the 4 hour, right? This one here, divided by 3 to 5. So divided by 4, right? Make the math easy. So that would give you the hour time frame for your relatable to see what's going on in your 4 hour. Okay. Another example. If your trading time frame, aka they also call it your focus time frame. If your trading time frame, aka focus time frame, is the 2 hour, divide that by 3 to 5. Keep the math easy. Divide it by 4, right? So if you divide 2 hours by 4, that'll give you the half an hour, right? So now you'll be able to see what's going on in these 2 hour bars, because each bar is 2 hours. You can go down to half an hour, and now you have 4 bars that you can get clarity out of the 2 hours. Just like I showed you, there's some things you can't see in the daily that you can see in your trading time frame. But there's also things you can't see in your trading time frame that you can see in your relatable. So all of them matter. You just got to figure out which one is yours. Mine is the 2 hour for now. And it's okay to switch it based off of however you feel. Like you'll get more fluid the better you get, but start with one, and then you'll be able to move around. Like, okay, based off the stock, you'll probably move it around anyway. Because all stocks move differently. All stocks take different times to get from support to resistance in each time frame. So, that's why I tell people to stick with one stock. There's plenty to know. There's plenty of money to get out of one stock. Plenty. It's not sexy. I know it's not sexy. You want to be all over the place and I'm in this, I'm in that. Yeah, and I was trading this and nah, man, it sounds cool. But if you know better, it don't sound cool. It sounds confusing as shit. You're doing too much. Because if you done made money off one stock repeatedly, like myself, you know that person is doing way too much. Because I did that. I did that. I did that. I could see if I was 20 years in the game and got algorithms trading for me and shit like that. But no, niggas got one computer, two screens, maybe. Like, you ain't, come on, bro. Doing too much. One stop, people. One stop. So I'm bullish on the market, y'all. Somebody told me pin bar as support gave him anxiety. I want to give y'all confidence. You're going to know what you're looking at, so you won't have anxiety. You keep watching, you're going to know what you're looking at because you're going to see the same stuff over and over, especially if you're looking at the same stock. So we're back to the same stock again. You know, you're going to have people out here that are going to have you all over the place. You don't got to be. You can be the call out group. If you know what you're looking at, you won't need that. See, people want you to need them. I don't want you to need me. If anything, collab with me. Let's build something or something. But I want you to get this, and options made easy. Tuning in here every day. Shout out to my coach Todd Billy, man. Charles Oglesby. I'm about to start calling him C Billy. We done collabed on a Options Made Easy boot camp, which is coming soon. September 4th is 4 weeks long, 4 1.5 hour sessions with me and him. That is my coach. This is the guy that showed me how to run the bag up that I ran up. We done collab, fam. I don't even know if y'all ready, but y'all, I think y'all will be. I think y'all ready. But yeah, I'm tapped in with my coach. We running the Options Made Easy boot camp, y'all. It's lit. It's lit. Live coaching, 1.5 hour sessions, 4 of them. So 4 weeks, 1.5 hour sessions. We have general admission, we have VIP. General admission, actually everybody. Not only do you get the 4 hours, the 4.5 hour sessions with me and C Billy, but you also get lifetime access to the Intro to Swing Trading Options course. Okay. You VIP, they get lifetime access and all that, but they also get an extra half an hour of Q&A with me and C Billy. They also get a workbook that they can put their information in and keep, track of the things that they're learning to, hammer home concepts. Like, we really want you to learn this thing. Options Made Easy starts September 4th. That link is also in the description. You want to learn how to do this simply. Y'all might want to tap in. Actually, you do want to tap in. You are going to tap in. Hit the link in the description. With that being said, I think I'm going to finish on that note, but we're bullish on the market. I'm still in Altria. Till further notice. It's your man, Don Bucks. Make sure y'all hit the notification bell for when I go live. And always remember, it's no competition, man. It's you versus you. See you tomorrow.